What's going on, guys? It's the Bulls and the Bears back again with a midweek update video with the wheel strategy, of course. So I went into this week holding 300 shares of Macy's, and that's it. That was all I was left with. I got assigned on my Kohl's position, and I netted over $200, like $240 profit on that. It officially got assigned, and it's not in my positions window, as you can tell. The P&L is still about $3,200. So, and you can check the graph. You can see it's kind of took a dip the past couple of days. So we haven't really made much new ground. Macy's is the biggest reason for that because we're back down on that position. It was I was at a crossroads with Macy's. I'm going to go into that because it's really the bulk of what I have to say today. Aside from that, I also did a cash secured put on Disney because I didn't really have a strong play this week. I made my video this weekend with a couple ideas, but the overall conclusion from that video was I might not do anything because we had a plethora of earnings this week, like major company earnings. We had the Fed meet for rates. We have GDP tomorrow. A lot of potential negative catalysts this week. So I didn't want to have that downside exposure, particularly for this week. So I didn't really want to do anything except Disney, which I am 100% on board to own. That's why I did cash secured puts on Disney, because if I got assigned with the market tanking or something, I'd be okay because I actually want to own Disney. So that's what I played. I actually sold 2 contracts at a $95 strike, received only $17 per contract. So I only stand to make $34 total profit on that position. But hey, it's something because aside from that, I really wasn't going to do much else. So we're going to take a look at some charts now. We'll check out Macy's right here. First of all, just look at SPY really quickly. We started the week with a bit of a doji candle. We did sell off at first. Let's go to the 15-minute chart. And here are the 3 days of this week right here. So we kind of sold off a little bit Monday, but then closed flat. We gapped down a bit on Tuesday and sold off. Closed red on Tuesday, but then we had some major earnings Tuesday afternoon. Microsoft, Google, even though they missed estimates, the market still went up. Google went up, Microsoft started lower, finished higher for some reason, doesn't make sense, but the market moved up, and we held that into this morning, and we rallied a bit more intraday. The Fed met, raised 75 basis points as expected, and we surged up. I don't know exactly what to say here. I'm pretty short biased. From macro perspective, and I'm guessing the reason why we popped up is because the Fed stuck to its guns. It stuck to the plan. We all knew 75 basis points was going to happen. They did that, so investors are happy. Investors don't like to be surprised. If the Fed did 100 basis points, whoa, that's out of nowhere, this is big time, then the market might move lower. But the Fed stayed on target, on its course, and stayed status quo, and that's probably why we went up. And this helped Macy's, for sure. So we'll go to Macy's now. There's actually a little bit more to say about Macy's, though. And let's actually go to the 1-minute chart quickly. There's a couple things we need to talk about. How my week started with this stock. So, well, I guess we should start with how it ended. So, Macy's closed on Friday at 18:30. So I didn't get assigned on my covered call, but the stock was above my adjusted cost basis, indicated by the blue line here at $17.99. It's actually supposed to be $17.98. There it is. So the blue line is my adjusted cost basis. Macy's closed at 18:30. So although I didn't get assigned on the calls, my shares were still in the profit. So I was left with a little bit of a dilemma. Do I sell the shares at the open up like 30 cents with 300 shares? So do I take like $90 profit? Do I wait for it to pop up? Sell maybe another covered call at 18.50 or 19? Ride that stock up by selling covered calls. Now that the price is higher, I could sell covered calls at a further away strike, which means if I would get assigned, I would have an even bigger profit. Sounds like the logical thing to do. However, we are in a bear market. We are overall in a downtrend. So I'm hesitant to follow it up because I don't feel like the upwards trajectory is going to continue or is going to last. So I was left with a little bit of a dilemma with that respect. Do I continue to sell covered calls? Do I not sell an option at all and just wait for the shares to appreciate and then cut them right away? Because if I sell a call, I'm pretty much locked in to that call into the shares for that week, because I don't want to take a loss on the call. So I decided to hold the shares for a little bit, and I wasn't looking at the market in the first 1 minute, and I guess that first 1 minute was the best chance I had because it pushed up to 1857, and I probably, in hindsight at least, would have liked to sell my shares at 1850. If I knew that 1850 was coming back, I probably would have said, okay, I'll sell my shares there. I'll take like $150 profit on the net trade and just wipe my hands clean of all of it. But I wasn't looking in the first minute, and then we sold off completely. And I was at this point, I'm like, all right, I'm not going to sell my shares for like a 20-cent profit. I want to at least like 1850. So let me put a limit order to sell my shares at 1850. So we sold off, we popped back up. I was like, all right, cool, we're at 1830. I'll put my limit order to sell at 1850. Probably should have done that at the beginning. But anyway, sell my shares at 1850. I put an order out there, but we didn't quite get there. We started selling off, dripping down. So I'm like, you know what? Let me just sell calls. Let me just sell a call again. I'll ride it out for the week. That's probably what I should be doing anyway. That's what the wheel strategy is. No need to get cute with it. Just sell a call. Since the price is above 18, I could sell an 1850 call for a decent premium. I mean, I sold the 1850 call last week, but I only got $9 per contract. This time, since the price was so much higher, I was able to get $30 per contract, which is a huge adjustment to my cost basis if the contract expires. So it'll be a 30-cent adjustment to the cost basis, which is huge. So I went with that. The call premium was attractive, so I sold it. But we just didn't have a good day with Macy's on Monday. It closed. It battled the 18 area, right where my cost basis was. Pushed up a little bit. Where are we here? Okay. So then we closed at 1810. So pretty underwhelming. And then, out of nowhere, Walmart adjusts its guidance for Q3, or Q2 actually. Walmart puts out a statement saying that it's lowering its expectations for its earnings report. So out of nowhere, Walmart decided to negatively revise its guidance for its next earnings report. And as a result, retail took a hit. Walmart said, oh, we don't think we're going to do this well. So anything that's sold, discretionary items like Macy's, like Walmart, like Kohl's, like Target, they all took a massive hit. And Macy's fell down to $17.50 after hours, and by pre-market it actually moved down a little bit lower, and then Tuesday it just had a bad day. I guess relatively flat, but obviously we were lower because of that gap down. We actually did move lower intraday as well, so we were down to $16.70. So I had a chance to sell my shares at $18.50 on Monday, and then by Tuesday we were down $2 per share, which is like 10%, or it's more than 10% actually. And I'm sitting there like, well, shit. But at least I sold my calls. At least I sold my calls, got the premium while it was still hot. But it does suck to now be in a possible crappy situation again with Macy's. And then today, we had that big push today, and Macy's felt a little bit of that positivity, and it pushed up to $17.50, so it recovered a little bit, which is nice. But that's what happened this week. So far, this is Wednesday, so the midweek update. This is where we stand. So Macy's, I had a chance in the first 1 minute of the market opening this week to sell my shares at $18.50, and I never got that chance again. Decided to sell a call at the $18.50 strike, and well, the call's doing good because Macy's isn't anywhere near it at this point. But we still have 2 days left. We'll see what happens. I don't know if this rally is going to continue in the market. But if it does, I hope it brings Macy's up with it. Again, my adjusted cost basis right now is $17.98. But should my call expire worthless this week, my cost basis will go all the way down to $17.68 right here. That's a big difference right there. So the two lines, it's going to go from $17.98 down to $17.68 if the call expires worthless. So that's pretty big. And it's a good thing knowing that even though Macy's is taking a hit this week and I got that unrealized loss back, At least I can know that my cost basis will be adjusted significantly after this week, down to the 1768 level. But we're not there yet. We're not there yet. We still have 2 days left. We'll see if we push back up. But right now, holding Macy's, got that Disney cash secured put, which is going fine. I mean, here's Disney right now. I sold the 95 strike, so my cash secured put's down here. This is the daily chart. We have 2 days left. It's at 103. Things are looking on the up and up for some reason in the market, so I don't foresee getting assigned on this. We'll see. We'll see what happens. That's where I stand. Account's looking about the same. Gonna ride out the Disney puts, ride out the Macy's position, and just see what happens. I'm not gonna be doing anything different, most likely. So that's gonna do it for me, guys. Let me know in the comments down below whether or not you guys are doing any wheel strategy plays, whether you're maybe just day trading the headlines. I'm curious to know how everyone's doing out there, because I know it's a pretty difficult environment right now to trade. So I'm curious to know how you guys are making out. As always, please like the video, subscribe for more content. I'm going to come back at you guys this weekend with a weekend review after we figure out where we end up at the end of this week. And then, of course, another weekly game plan video following that. So that's it. See you all next time.